Okay, guys and girls, good afternoon, good evening, good morning, wherever you are tuning in from. I appreciate every single one of you, 400 of you live on this call. This is the most that we've had since we got started. So that just shows that there's a lot of you people right now thirsty to get this information, ready to go. If you are, just drop me a one in the chat. I'm excited for this. I want to see all of you active, engaging in this. And this is when we put some stuff in the channel. 410 of you are committed to this information. So let's start seeing these reactions. Let's start seeing this engagement because the more excitement we get from you guys, the more we can push out. Last week, we had an insane week. We had a 100% win rate, 79 trades, and a staggering amount of pips caught. So tonight, I'm excited to go through this with every single one of you. It's not me doing the training. It's not me educating any single one of you. Tonight, we have the actual trader on the call. Some of you may know him by name. Some of you may know him as the magician, whatever it is, the wizard. I don't care what it is you want to call him. But he'll introduce himself on here, no doubt. I'm very, very sure of it. But what I'm going to do is I'm going to bring him up. I'm going to allow him to unmute himself and get everything rocking and rolling. And I'm going to unpin myself. I'm going to bring him up here. So he should be good to go. Let me remove myself off of Spotlight, and then we can literally get this thing cooking on gas. I'm gonna literally let you fire away, bro, and I'll make you host, and we can literally get this shit popping. So there seems to be a lot of people.
Okey-dokey.
There's 424 bodies here, so
No
this is big
pressure.
numbers. No pressure.
No pressure.
Okay, there you go, bro, friend. So you're host, so you can start screen sharing now. Let
Give
me,
me a
in fact,
minute.
let me see if I can keep host on me, and then I'll keep the questions on the back end, and I'll allow it so that you can screen
So
share.
I'll just send you a
There
request to
you
screen
go. Yeah,
share.
so you can start screen sharing. But guys
Excellent.
and girls, as we go through this, he's a ridiculously pinpoint educator. So what I want to do with this is keep your questions until the end. And if there are things along the way that you have questions on, make a note of them. You know, myself and James are here to go through as much of this as we physically can with you. But we want to make this to the point where you can go away from this. You have an understanding of what it is that we're doing, how it's working, how to maximize layering, everything like that. And I'm going to shut up and I'm going to let Matthew take it away.
Right. Hello, everyone. Hope you're well. I will be your mysterious tour guide today for today's Forex Safari. As you can all see, my camera is off. That's not because I'm shy, but because if I show my face, then the pit police might actually track me down for crimes against the market. So for now, I'm going to remain your faceless signal sniper, or as Bradley mentioned, your magician, as some of you like to call me. It's great to finally speak to all of you directly. For those of you that don't know me personally, my name is Matthew, and I'm proud to be the mask behind the setups, the structure, and the strategy that's been driving the success of our trading group. If you're in the group, it's very easy to see the results flying through the chat, the wins, the pip count, the perfect entries, but there is real intention, structure, and experience behind every single move that we make. So I wanted to jump on personally today and connect properly, firstly, not just as a name on the screen, but as the person guiding this journey with you. We are in this video today, we are going to talk you through three foundational concepts that play a huge, huge role in our approach to the markets. Those three things are layering, runners, and re-entries. And these aren't just advanced tactics, they're tools that, when used correctly, allow you to maximize profits, minimize that risk, and trade with the kind of precision that institutional traders rely on. So whether you're new to the group or you've been catching these moves for a while, understanding how and why we use these techniques will take your trading to another level. So let's break that down. Let's talk about how we layer into a position like a pro, how to hold your runners with confidence, and how to execute those re-entries without adding that emotion. And with that, I'm going to move on to layering first. So I'm not going to go into a massive amount of detail because we will literally be here all night. There are some bullet points on your screen just here. I'd like you to screenshot that and take notes if you like. But essentially, layering is a key concept that we use often in the group. How we use it effectively, because it is such a powerful tool when trading gold, especially inside institutional zones. It's a really effective strategy because it allows traders to manage their risk but maximize potential gains by scaling into that position. So when we provide signals with 3 or 4 entries, the idea is to enter the trades in stages rather than all at once. And believe it or not, it might not seem like it, but this approach is actually helping you balance your risk. It's actually improving your overall trade execution, especially with a volatile asset like gold. So to implement the layering with our signals, you can do one of two things. You can either divide your position size amongst the provided entries. So let's say, for example, you trade 0.3 lots. You can break that down over different positions, over the 3 lot entries that we give you. But what I would advise you to do is just open 3 different positions. And I'll talk to you about that why. This is going to make sure that you don't overexpose yourself at any single level. And if price reverses before reaching all the entries, you're still capturing those profits from the early positions. So with that out of the way, I'm just going to jump into the charts and just show you an example of that, okay? Because obviously talking about it's great, giving you a better understanding of it's great, but let's show you something in real time. So on the chart in front of you, I've got gold on the 1 minute. This is how I enter 99% of my trades. And I'm going to show you just some small entry models today. I will draw out a few of these institutional candles, not all of them. There will be on your screen probably 10 or 15 that I won't draw. There'll be 1 or 2 that I do, and that'll just be the main ones. And it's just purely so I can show you an effective way how to layer, re-entry, and then we'll talk about the runners as well. So we have a institutional down close candle here. You probably can't see it, but it's the liquidity, this big push, well, it's not a big push, but the push that took all the liquidity from the left-hand side. What this means is institutions have sold before they intend to buy. So I've pulled out my Fibonacci retracement tool and it has been modified to the 1, the 0.5, and the 0. That is all you need for my strategy. And this becomes our buy zone. Now what I'm waiting for is price to come out above this down close candle. Once price trades above my down close candle, I'm waiting for price action to come back into the buy zone, which would be the open at 3195 to the 50% at 3191. So this one in particular would be a 40 pip range. So using the trading view replay function now, I'm going to show you it in real time and we'll see if we can get a couple of sweet entries. We can see if we get a nice setup. So I'm going to press play. You'll have to bear with me. I don't know how quickly this is going to all move forward, so we might need to adjust it. But that's fine. Okay, so we've immediately traded above. This, even a wick above to me is an entry. Okay, this is now a valid zone. So I'm going to call a signal. It's going to be a buy, and it will be between 3195 and 3191. So I would have called it as soon as price came back into this zone. So let's use a horizontal array. So our entry zone would be 3195, 3194. Let's say that, close enough. Obviously, when you're setting these up, you'll be using buy limits. So you can just type it in on the graph. I want to save time a little bit. So let's say 3194 for argument's sake. 3193. And then we would have the last one at the 50%. Okay, so this one would be a 40 pip range, for example. And it's activated. The first range has come back down. And we've got essentially all of these layers would have been activated now. Okay, so we've got at least 3 positions open. Personally, I would have, this is just how I trade. I don't suggest that you all start doing this right away. I have 2 or 3 entries per layer because we would now be targeting a buy position of around, let's say, TP1. Let me type it on so we can see. TP1 be here, this liquidity. TP2 would be this liquidity here. And TP3 would be this part here. Okay. All right. Let's move all those out the way. I'll delete those in a minute, but just for now. Right. So we're going to press play and see what happens. Okay. So we've all activated all those zones again. Okay. We've just come up. We've hit TP1. So I would have one position out of here gone, one position out of this layer, one position out of that layer. I've still got 3 positions running, let's say. Okay, obviously by now, by now, our stop losses are at break even, and I would now be instructing you to re-enter the market. Okay, now very quickly on these re-entries, I want to just talk about what they actually mean. So when I call a re-entry is essentially an opportunity to get back into a trade that's already been signaled and has moved in our direction, but maybe either you missed it or the initial entry moved off too quickly, or it's already hit one of our take profit targets. It's already moved into 40, 50 pips profit, but it's moved back into a still valid zone. We don't need to stress about it. It happens. We know gold moves fast. And sometimes those entries move so quickly that we weren't at the chart when the call was dropped, or like I said, it moved really quickly. We want to get back into the market. And with what we need to ensure we're doing is using the correct risk. Now, this is crucial because your second bite of the apple should never be based on emotion. So every single re-entry that we call, it has the same credibility as the initial entry. And the reason for that is because it's calculated. It's backed by the same logic as the original call. And very quickly, I want to talk about when we sort of say, oh, extreme risk, high risk. When we say that, it's not as telling you that the trade is now weaker. It doesn't mean that that zone is likely to fail. Not at all. In fact, I'll let you into a secret. The more times that this zone now gets tapped, in my experience, for a higher probability amount of times, it actually means that we're going to be having a big push up the other way, because these sell positions are being removed by the institutions and they don't want to be in drawdown. So actually, ironically, the more times we tap in this, most of the time, not always, then it means we're going to get a big jump. So I'm almost guaranteeing now off this play, we're going to see TP3. I really want you to focus on that. It doesn't mean the trade is weak. It doesn't mean that our zone is likely to fail. It means that you're actually entering the world of Forex twice. You're stacking your own risk. It's your personal risk that's increasing, not the setup has changed. But because you've added another position, you're increasing your exposure on a volatile asset. So that's why we call the re-entries. And let's press the play button again and see how we get on. Okay, so the zone's been filled again. Lovely. Now we're back in. Okay, so we broke even again. Okay, back into the entry. I want you to enter again, and I want you to re-enter all the zones again. Nothing changes. The re-entry model does not change. The stop loss doesn't change. The amount of layers do not change. And personally, I'm gaining more confidence in this zone now, so I would be layering a few more positions in. So let's play the rest out and see how that goes. Okay. Again, I just want to note something here. This is spent, I know this is obviously a replay, but in real time, this has spent a lot of time here. This is mitigation of this zone. I'm super confident in this now. My minimum target is TP3. This is how I trade. I'm seeing institutional plays here, tapping out, creating liquidity at the top and bottom. It's luring in sellers and buyers. And for me, its intended target is up. So let's play the rest out. Okay. Okay, we're rocking and rolling now. Okay, so by now we've hit TP1, so we can take off one of our positions at TP1, maybe 2 of our positions. At this stage, I at least want to see 2 positions open, one for TP2 and one for TP3, both set at break even, or if you feel more comfortable, maybe 20, 30 pips profit. Okay, Shifting on, that's TP2. You can close another position off now. Do you know what? I'm going to remove that because it's actually quite noisy. Okay. Okay, we're back in the zone. Guess what? Nothing's changed. It hasn't swept the liquidity. There's still liquidity here. There's still liquidity here. There's still liquidity here. And actually, another reason why I really know the price is coming up here is because we've got an up close candle here. I'm not going to go into too much of these because it's very, very, very complex. But I know price is coming here. I'd actually put my mortgage on it. This needs to be tapped out because it hasn't been touched. So I'm confident in another reentry. And obviously, the reason I tell you that is because this is exactly how I would structure a reentry right now. Nothing has changed. We enter again. All three layers, I need you to put all three layers back on because this is where it's coming. I can guarantee it. We're going to touch this zone. I can't tell you how long it's going to take, but I know that we are coming up here. And obviously, on its trajectory up here, I'd be telling you another positions to buy. We're not going to do that today, but again, I want you to re-enter the market again. The setup hasn't changed, the direction hasn't changed. It's just your personal risk level that's increased. That is it. That is, not the analysis has got weaker, just the extra risk for you entering again. So let's go ahead and play that one out again. Okay. Right. Now, this reaction, this is so strong. And the reason this has happened is because it's closed all of these sell positions. Now, very briefly, when an institution closes sell positions, you can guarantee, and I mean guarantee, a strong move in the opposite direction, at least for 100 to 150 pips. The reason for that is because when institutions and big banks and hedge funds, they remove their sell positions, demand automatically increases. This is a footprint that cannot be hidden on the charts. And this is where we learn to make money, okay? So this now, again, I'm confident it's coming to TP3, but let's see how we get on, see if there's anything we can add in on the way. Okay, TP2 is obviously hit. We can now leave a couple of positions open. Maybe a stop loss would be around this sort of area. It's taking its time. Really hope it is it now. Right, we've got a couple of candles here that are quite interesting. Okay. It's taking its time. Yeah, excuse me if I don't carry on talking over this, otherwise I run out of things to say.
Just to let you know, bro, if you want at the bottom where it says 1x, you can change that. I think there's a speed next to the 1M.
Yeah, I do know that. Obviously, I don't want to speed up too much and miss anything to show a value, right? I've done it a couple of times, it's just, and then we've missed it. So I just want to jump in here and say that we've got a down close candle here. We've got a down close candle here. So these are going to be potential setups for me to watch. There's one here. Just going to mark these out. Just because I'm looking now for another example of where we could be going long, and I can show you maybe potentially some. Okay, so here would be exactly that sort of thing. So again, we've got another down close candle that's just been formed, just here, and we've traded above it. So again, I'm going to send you a signal. I've obviously missed it because we're in replay, but I'll be sending you a signal now, 3212 to 3209. So again, I want you to set the initial entry when I tell you to buy. Then I want you to set buy limits up at the other 2 or 3 areas. So you'd have this laid through this zone. We would have filled the zone now. So again, we'd be in buy position like this. Stop loss somewhere down here below this liquidity. And obviously we'll be targeting, I'll just put up here for now. Has to go somewhere like, that's what we got, a psychological level up here maybe.
Whilst you're explaining this, mate, there's a few people asking what a down close candle is, if you want to kind of touch on that.
Yeah, okay, so very quickly, because it's a very advanced technique, and I will be doing videos on it in the near future. A down close candle is essentially a institutional play. So this institutional play here was to wipe the liquidity from below. Look, this was a double bottom, and people would have been buying from this. So it's come to sweep their stop losses before buying and going the intended direction anyway. It's an indication of mere market moving in the opposite direction. So we are basically buying from the down close candles. You see down close candles in an uptrend, all right? So play that one ahead. Go what's happened on that one. Okay. So TP1 would be hit, stop loss to break even now. I'll get rid of this again because it doesn't get quite messy. This stuff, we're sort of TP3 by now. Right, okay. Going to pause it just there. So let's use, I want to just use the arrow tool for a minute. Let's say, for example, each one of these arrows is at least one more position running, okay? From here, and from our first entry, and from our second entry, the first, second, and third entry, sorry. Okay, let's just say that, for example, these are one position or a partial position running, and we've got a position at this 50% as well. So we've hit what maybe TP1, TP2 on this one, and we've got one position, let's say, just for argument's sake. Personally, I run quite a few runners. It's just how I trade. And this is actually a perfect example for me now to talk about what a runner is. So I'm going to add one more piece of information in to show you why. Again, we have a down close candle. Liquidity been swept, institutional play. This is going to need to be mitigated here because look, it's only taken the open. I won't leave that on there, but this, just keep an eye on this side. Right, this is a really good time to come in about what a runner is and how to effectively use it. So in our trading approach, you'll often see the term runner, and it's always mentioned normally after securing partial profits at one or more take profit levels. Now, a runner refers to the remaining portion of a trade that we leave open after taking partial profits. So let's say you took profit at TP1 and TP2, you leave one position open, and it's called a runner. Now, once we secure profits and we move our stop loss to break even, the runner becomes a risk-free position. And from there, it does either, all I want you to let it do is one of two things. It either hits your own final target or one that I might mention, or you take it out at a point that you're happy with, and then its job is then to lock in extended gains, or it gets stopped out at break even or just above profit. Because then if the market reverses, it's getting stopped out at break even, it doesn't matter. What I want you to let go of the mindset that you're worrying about the stop loss on your runner. Its job is to have its stop loss hit. And the reason I said that is this is a strategic way to let the market do the work while protecting our capital. They're especially useful during trending conditions when we can run a short while in a long. And the reason for that is we can sell and make profit off a potential small pullback while the overall bias is not changed. And I'm going to show you that perfectly just now. I can almost guarantee it. We've got a flat double top candle here, and we've got an unmitigated zone. So I'm going to take this away because I know it's coming at least to the open of 50%. And we're going to enter a few short. So I would necessarily give you 1 or 2, a 20 pip range here. And I'm going to short. And this will be where I tell you to short when we still got long positions open. The reason for that is I'm 99% sure that price will not break this level. There is absolutely no reason for me to remove these potentially massively profitable trades because prices only come to here. Just because I'm entering sell doesn't mean I can't hold it long. Now, I know that's quite hard for you to wrap your heads around, but we are trading in line with the banks and institutions. We are entering the market at the same time as them. We want to mimic their behavior as much as possible to maximize our profits while still minimizing our risk. And I know that blows a lot of people's minds because they've been taught not to do that, but I'm going to show you a perfect example of that now because I can almost guarantee that this line will not be broken. So we're going to enter a couple of shorts at this level, 2, 3. Again, it would be sort of where with the close of this candle back up to this liquidity. So we'd be enter now 3, 222, to 3, 225, let's say. Okay, so again, you set your sell limits, 1, 2, 3 layers. Let's play that out and see how we got on with that. This for me is a minimum take profit is here. Sorry, the top of this candle here. Okay, we just mitigate the 50%. Perfect. Okay. See, so our short managed exactly the level that we expected, and we sold and we gained profit. But these longs are now still running the same amount of profit again. And what I actually missed, to be honest with you, went a bit too quick. We'd be longing again from here. Okay, so we re-entering more long positions again. These are now closed. But again, we leave one runner. So I've closed 3 positions. I've got a partial position, maybe a 0.5, and it's now set to stop loss at break even. I've just made maybe £2,000, and I'm leaving this just to have it stop loss hit, or maybe we continue. Maybe I'm wrong and it continues down. Either way, we win because we're making the market pay us back twice. So let me just enter in those longs that I've missed. We would have been long off there again. We would have had the range. We would have had the same range: 3215, 3214, 3213. And again, it would have filled that zone. Just get rid of that. Let's play it out, see how that goes. Okay, so TP1 would have been here, TP2, let's say. Okay, back into the zone. So I'm going to extract another re-entry. Again, all 3 layers need to be active. I want you to see you putting those buy limits back in, not just at the entry, because we don't know how deep into the zone it's going to go. Remember, when we use the layering technique, we are ensuring that we're not having to get that sniper entry because we're actually layering into the strength of that zone, right? You know, we don't want to see the 50% get broke, but the deeper it goes for us, the better, because it means more profit in the long run. Oh, just pressed the wrong button. Okay, back into the zone again. We're going to go enter again. Again, the more times this zone is getting entered, the more effective it is becoming for me. Sorry it's taking so long, guys, but I really don't want to play it too quick. I don't want to miss anything key. Okay, back in again. Guess what? I'm not scared. I'm not using emotion. Now, one point I just want to point out here is I never trade emotion or feeling. So all I'm looking at right in front of me is the same mechanical strategy, the same mechanical entry model that was entered off of this. Nothing has changed. The zone has not been broken. There is still liquidity above. We are still in a bull trend, as you all know that on gold. Nothing's changed. So I'm now, potentially 3, 6, 9, 12 positions deep. Doesn't faze me because I believe in this strategy and nothing has changed. The logic hasn't changed. The risk hasn't changed. So I don't waver in my re-entry. I take it. If it meets my criteria, I enter the market on every occasion. If it hits my stop loss, I don't blame the strategy. I don't blame myself. We live to trade another day, and the market had a different agenda on that occasion. It doesn't matter.
So for those, just a quick one, bro, on that. So for those people who are relatively new, they maybe don't have the emotion dialed down, they maybe don't have the discipline dialed down. Would you recommend banking profits as we go along and then re-entering as it comes down? Would you recommend that? Rather, because obviously now you're mentioning maybe 12 trades open for someone who's a little bit emotional.
Yes. So my stringent advice for someone who's a beginner who hasn't quite got the mindset locked in, which I don't imagine you have, and that's not a problem. It's all this takes years to master. What I would be doing is I'd be entering one position at least at all of the levels. So let's say, for example, you're a beginner. I want to see one trade at each level here. TP1, TP2, and TP3 would where I'd be targeting. or if you want, just hit TP1. But actually, that's a higher risk strategy, not less. Because as you know how gold moves, our stop losses are 100 pips to allow for liquidity sweeps. Now, if you're taking TP1s, and actually, to be honest with you, I just thought this doesn't make sense because we don't hit enough stop losses for it to matter. But if you were hitting more stop losses, you have to hit like 3 or 4, 5 maybe TP1s to make the stop loss back if you're running 30 pips. So, if you hit 3 stop losses, which we don't do, you have to hit more TP1s. The safest bet is to actually let it run to at least TP2. But yes, if you've taken partial profits, just enter once at every level again. If it doesn't fill the zone, you've just got one entry. So you're more risk averse. Does that make sense?
Perfect, yeah.
Yeah, cool. Let's play the rest out and see how we get on with my 12 now entries. Okay, I'm back in the market again. Back in the market again. Okay, we filled the zone this time. Okay, TP1, TP2 would probably be around this level. This, okay, just going to pause it there. Can you imagine the amount of profit that we're in now? Not forgetting this position, this position, this position, and this position. So these runners, if you had closed them off when I instructed to sell, you'd be missing out on 360 pips right now. Okay, because the job, if it hits the stop loss, it hits the stop loss. This job was to run as many pips as it can. If it comes back and it takes the liquidity and you get stop loss and it reverses, brilliant, perfect. The risk that we are running by that risk break is risk free. If it hits the stop loss and doesn't travel 500 pips, you haven't lost anything. But if it travels 500 pips and you don't have the runner, you've lost 500 pips. It makes complete and utter sense to allow your runners to do the job. So we'll play out a little bit more, and I think that probably do in terms of
I think just to
positions.
clarify, because I'm having a few like we're not saying by any means here that you should have 65,000 positions open at one time.
No, sorry, but I'm not saying that. I mean, I'm showing you how I trade.
Yeah.
I can't make individual trading decisions for everyone, but just as a holistic view for everyone, 3 positions minimum for each entry. Yeah. So let's say, for example, on this one, we only got one entry on this one because it didn't fill the zone. If on my call for re-entry, it fills the zone, I want you to be using all 3 entries and again and again and again. Because if you're trading risk averse anyway, you're setting your stop loss to break even. So all I'm asking for you is if you're new to trading, just every time I call a re-entry, your 3 entries. That's it. Okay, just 3 entries at each of the price. So for example, if you're on the re-entry, you only took the first one, and on the third re-entry, it filled the zone. Again, you're missing out on potential profit. Again, you've got this filled the zone perfectly this time. So every re-entry, you need to set those buy limits up because no one can tell you how deep into that zone it's going, not even me. I can tell you it will come into this zone at some point and to some level, but not the exact price. So we just need to make sure when we hit those re-entries that we're capitalizing on the opportunity that the market has given us.
And I think one thing to just touch on there real quick is that if your account balance doesn't allow it, then don't necessarily. Again, I'm not going to talk over you, Matthew, too much. I don't want it to kind of think where people have to feel like they have to be in 3 trades, they have to be in this, otherwise they won't make money. Correct me if I'm wrong, but you can literally enter one trade and it'll run its course, and you can still grow your account nice and steady with this.
Oh, massively. Yeah. I mean, like I said, I'm talking from a very experienced personal level here. Now, yeah, I would suggest if you only feel comfortable and you are just getting started, then yeah, just 1 position on each trade, but 1 position at each of the levels at least. Even as a beginner, you should have the capability to go buy now when I say it, so long as the price is at that entry price, and then quickly go on to MT4, MT5, whatever your trading platform is, and set up those buys or sell limits. just one at each of those positions, and the potential for growth is massive. Again, you always have to be trading a style and risk management strategy and level that you're comfortable with. Don't do everything I say on this call. I'm just trading as I see it in real time as I would. Obviously, I don't suggest for 1 minute that you will start going 12, 13 positions per trade. That would be ludicrous. But I sort of, in a way, I'm so confident of where price is going to be delivered that, and because it fits in my risk management strategy, my equity is huge. I don't need to worry if the market goes against me. I'll just move on to the next trade. But that isn't the same for everyone. So no, that's not what I'm suggesting. What I'm suggesting is that we use that effective layering technique to capitalize on the opportunities that the market will give us. At least one at each level, anyway. Last little play, then we'll see what we can get on the last bit. We've got, well, I'll just stop it there actually, just so I can show you. We've got a small phase of consolidation now, and we've got a triple top, which I actually wouldn't call a triple top. It's actually called a relative equal high. What this is right here is a retail trading concept. So we have got early sellers jumping into the market. They are using a retail trading concept called resistance, which will work probably 30-40% of the time. And they're probably selling down to this liquidity here. So my prediction at this point is that we are going to get a sweep of this liquidity, and then I'm going to be entering a sell, coming back down to sort of this level around here, because there's a triple bottom here, a relative equal bottom. So I can almost guarantee that this is going to be swept, and then we'll be looking for a sell position. Okay, here we go. We've got a nice rejection there. This is enough for me to start building up my sell zone just here. Now we're just waiting for a trade below. Maybe let's try, if we can get a nice sell setup out of here. This would be great to show you at the same time. Perfect. There we go. Right. Sell position loading. This is where I've just sent you a sell signal. We'll do this last trade now, and that will be us for today's recording or meeting, whatever you want to call it. So we're going to sell from 3229 to 3232. Sorry, 3232. That's a handful, isn't it? Let me just show you those lines. So we look the entry, the open of the up close, 31, 32, and then obviously the 50%. Again, we're layering into this strength, okay? It may not fill this zone, but we need to be in the market, okay? So sorry, yeah, that will be there. Pull that down a bit. There we go. Okay, so we've got one position open at that price currently. We just tapped into it again, so we can enter again because what was this? Nearly 30 pips. No, it wouldn't have even been at break even yet, so we can just hold that entry. Okay, you can enter again because we would have been at stop loss at break even, so we would have the first layer activated at this stage. My short position would be set up something like this. I'm going to target this 50% because of this triple bottom or relative equal bottom, whatever you want to call it. This is money. We always trade towards the money. And this is another reason why I'm so confident in holding those trades, because when we trade with the banks and we see those big blues move in and we've got nice profit, again, if you're comfortable, take it. The way I trade with the banks, I trade towards the money. And don't get me wrong, I still have an emotional attachment to the profit, but my experience takes over that. I say I'm trading with the banks. I'm trading towards the money, and that allows me to hold. So on this trade, TP1, we would have actually arguably hit it. TP2, TP3 is going to be the bottom of this triple bottom here.
And I think just to touch on here for the people who are watching this that maybe are brand new, that you maybe sat here thinking, I have no idea what a layer is, I don't know what an entry zone is. One thing that I would look at there is them little dots that he's put on where the entries would have been. We would have entered between, let's say, 32230 and then 3234. So in that entry zone there, is a 10 pip range, for example. So
Yeah.
31, 32, 33, 34. When it gets to them numbers, what we're basically saying on the trade is that you can enter at 30, you can enter at 31, you can enter at 32, you can enter at 33, you can enter at 34, as an example. If it goes
Yes.
to 35, 36, 37, that would be when you wouldn't be entering the trade. So if you're brand new on here, like what the goal with this is for you guys to understand that the signals that we're sending are based purely on statistics with an incredible amount of knowledge behind it. So when you're seeing this buy with entry zone, take profit, take profit, take profit, stop loss, you want to go to your MetaTrader as quickly as you can, press buy or sell, whatever we recommend, then go in and modify the trade. So then that way, then you can get in as close to that time that we physically send out that trade. Hope that helps for a few people that have been asking the questions.
Yes. Sorry, but I was going to do entry rules right at the end.
My
Sorry.
bad.
Yeah, that's all right. Anyway, I mean, do we want to play this? Do we want to see if this hits TP3? I really do. Yeah, there we go. Brilliant. Right. What I was going to talk about next was the entry rules and just talk a bit more detail about these zones. I was actually just going to zoom on this one and show you in a bit more depth. So obviously we didn't fill this zone. So let's say, for example, I've sent a signal. Sell now at, it would be 3229. So what I want you to do, open MT4, make sure the price matches the price that we've given you, give or take the range of the pips. So between 3229 and I don't know, 5 or 6 pips. We can't be perfect. The market moves very, very quickly, especially with gold. And then I want you to worry about modifying the TP and stop loss after you've placed the trade, okay? Because otherwise you might miss the entry. Once you set up the initial trade, that's when you go back and you set your sell limit to 3 to 30 for the next one. And then again, you open another one at 3 to 31 for the next one. Then you put the stop loss and take profit levels in. Now, personally, as a beginner trader, what the safest way to trade is have one trade at TP1, one trade at TP2, and one trade at TP3 if it fills the whole zone. If it doesn't fill the whole zone, then I personally, from as a beginner trader, I'd be going straight in the middle. But that's just me. I wouldn't mind medium risk. So when we give you the take profit levels, they aren't necessarily broken down in level of risk, but in the market conditions of gold, there is a higher risk level involved with the further the price has got to travel. Obviously, I know that that's not the case because there's always an intended target, but from a beginner level, targeting TP2 isn't a bad place to start. Maybe at TP2, you want to take 80% of your position. If people don't know how to close a partial position, give us a question in the comments box. We'll talk about that. And then you can leave your 20% as your runner with a stop loss at break even. I think about that brings us up to speed, mate. Is there anything else you want me to talk about? Is there anything else you want me to cover? Do we want to open up for questions? What do we want to do?
I think a big thing there is like, let's say we send the trade and the entries at 30, for example. And when they get in, it's already moved 7 pips, 8 pips, or they're not getting it at that exact point. What do you recommend for people who are just about to press buy or sell and the trade's already moved? Because we know how quickly gold moves, right?
Yes. So I would say if it's moved less than 10 pips, you're safe to enter. Um, any more than that, and you're just increasing what your stop loss level would be to beyond what the risk to reward ratio opportunity is. So let me just talk to you about that a little bit. So let's say, for example, I entered a long position down here. Well, let's take the main one, right? So I do use at the moment, the way gold is moving with all the news from Trump, all the war in Gaza and Ukraine, all the fundamentals that are driving price up. I am using a larger stop loss than normal because don't want to get caught in a liquidity sweep. A liquidity sweep, for anyone that doesn't know, this is a little bit of one here. It's a surgical, tactical move to take stop losses. And they can just happen at any time. No one can tell you when they're going to happen. And this is why we give ourselves enough breathing room. When it comes to the risk to reward, If we target in TP3, I'm using at least a 3-to-1 risk to reward, right? On my TP3 to the stop loss is 3 times normally, or around about. If we enter the market too late and we're increasing more than 10 pips, can you see how dramatically it lowers your risk to reward? Sorry, your reward to the risk. So it then becomes a bit of an unfeasible trade. Now, what's important is a great question. What's important to talk about with missing an entry is you haven't missed anything because the Forex market is trading $7 trillion. Like you can't fathom how much money that is. It's the most liquid assets on the planet. $7 trillion a day. If you miss an entry, you miss an entry. You're not missing anything. You're not going to make any less profit over the year because you missed one entry. And in this game, you need to have that emotional control, right? If the entry model is not fit, the criteria is not met, don't enter. If you miss it, you miss it. We're sending near enough 9 trades a day, between seven and 9 trades a day. So don't chase it. If it's moved more than 10 pips, if it comes back to the re-entry with it, which at the moment is doing a lot, then we will call it and you can jump back in the entry, sorry, into the trade when all of the entry criteria is met.
Just a quick question. How important do you think it is to keep the order sizes the same on when they're trading this? Because like obviously we teach to keep the order size the same. So if you're entering 4 different positions, and again, let's just use worst case scenario, we hit a stop loss. A lot of people's mindset sometimes is to lower their lot size because they're scared of losing another. They're
Yeah,
scared
yeah.
of the risk.
Okay.
How important do you think it is to keep that stop loss unified and almost embrace the stop loss, if you will? Uh,
Yeah, it's absolutely imperative that your position size stays the same or in at least in line with the level of equity. So let's say you're using 0.5. I'm just going to use that. I mean, what is the general consensus around lot sizes? Is that all right? I don't know the size of people's accounts.
I
Let's
think
say you use,
the average client that and again, like from a numbers perspective, the average client's probably got 800 to 1500 in their account. Guys, while you're listening to this, drop me your account sizes in the thing, just so I can see a rough number, but I'll have this as a thing here. So
yeah, yeah,
1000,
okay,
1500, 4K, 8K, 23K, 14K, 2K, 1.4, 6,
okay.
yeah, 300, 400.
All right, let's say 0.2 then. That seems like a reasonable number, I would say, with the account sizes you've just said. 0.2, 0.1, for example. It is absolutely imperative that you do not change your lot size after the off the back of a stop loss. You can change it slightly off the back of a win because your equity has gone up. I don't suggest doing that, but you can. But you have to maintain the same lot size because let's say, for example, you do hit stop loss. By the way, they do happen. I know you looking at the group last week, you wouldn't think to do. I am human. Every now and then the market does move against us. But if you reduce your lot size on the next trade, you're absolutely elevating your risk. By whatever percentage you drop it by, you're elevating your risk by that percent. Because if you now hit a take profit, you haven't even made that back, especially because I can guarantee if you just hit a stop loss, you're pulling that profit out early, sorry. And in fact, what you need to be doing is using that emotional control and trust in the process to ride it out longer. The higher risk something is, the more money it's got to pay you. That's the easiest way I can explain it. So if you hit a stop loss, your lot size doesn't change. If you hit a take profit, your lot size doesn't change. When your account balance is gained maybe £1,000 for argument's sake, you can increase that lot size ever so gently. And that obviously is all down to your own personal preference, your own personal risk management strategy. We cannot be responsible for everyone's individual trading decisions. There are general rules of thumb when it comes to how much you should risk on every trade. But to answer your question very long-windedly, sorry, Bradley, do not change your lot size if you hit a stop loss. You are actually being counterproductive to your account's equity.
And I think it's very important for people on the call. Like everyone's asking, like, what should my what should my lot size be? You have to pick what feels comfortable for you. This is your account, your trading journey, your vehicle, if you will. So seeing other people's results in the chat you shouldn't be basing your trades based off other people because you don't know their account equity, you don't know their risk tolerance or anything like that. So you almost have to base it off what you're comfortable with. If you're trading at 0.1 and you're checking your phone every 45 seconds, you're probably trading too high. So lower the lot size. Again, don't be worried about what other people are doing. Just focus on your gig.
Yeah, I mean, there's plenty of maybe I'll have a conversation offline with maybe about putting something in place. A good idea that I've got, um, but there's plenty of lot size calculators out there that you can use, and yeah, it's all down to personal preference, personal risk. I mean, I really hope that anyone that's in the forex market and is trading with funds that they're not ever trading anything they can't afford to lose anyway, because that's the first rule. But yeah, you're absolutely right. If you're panicking when a trade's in place because it's money that you can't afford to lose, then yeah, you need to lower your lot size. But that said, what I think you guys are going to learn, you're going to learn to get a relationship with the strategy. It's why I'm so proactive in trying to update the market recaps. I want to give you, and no one else will offer this as well. There's very few people that trade this way on the planet, and the ones that do will never show you inside the magician's hat. And I'm really happy and pleased to be showing people the logic to give them the confidence to hold these trades to maximize their profitability. The more money people make, the happier I am. So yeah, we
So for
just
people
have
moving
confidence in it.
sorry, bro,
Say that
people
again.
moving their trades to break even, what would you recommend on that? Like, 'cause obviously, there's a few people asking when should they move the trades to break even? How should that work? What would
Okay.
your kind of response be back to that?
For the levels of count equity, you've just told me the way gold is moving at the minute. I would move them when we instruct. It's the whole point of us instructing at that level. Um, would you like my personal preference on it, what I do, or do you want me just to answer the question to what other people should do?
Yeah, man.
So personally, I don't move a stop loss to break even until it's at least 50 to 60% of my take profit target. Okay, so I'd move my break evens normally. There are certain circumstances that I will do it early, but for the most part, I won't move a stop loss to break even until it's 50, 60, 70 pips in profit. However, for beginner traders, when we instruct you to, if it suits your risk management strategy, again, it's your choice. The benefit would be the 30 pip mark because you've now got the added benefit that we're calling every single re-entry. So you're not going to miss it even if it comes back to break even anyway. So yeah, 30 to 40 pips is a really safe place to start.
And I think as well, touching on that, like if you guys on because a few people are saying, oh, I'm getting pissed off by hitting break even. If that's the case, guys, and we're
Okay.
30, 40, 50 pips in profit, put your break even at 20 pips in profit. So then that way,
Okay.
then you're always making money, you know?
Okay. My response to that would be that there's a couple of ways to look at it. The first way to look at it, don't use it. Let's be honest. We don't tend to hit stop losses. We've hit four, five, maybe six in the 3 weeks that we've been working. Now, it's absolutely your choice. We are just giving you the most informed information to make the most intelligent, informed decision of your own understanding of the forex market. So if you is pissing you off, don't set them. Run the risk. Again, we don't really hit stop losses. The other response to that is okay. Leave it a bit longer. Wait till it's at TP1. Okay, and also if something's pissing you off in this space, try and look at it differently. The market's just presenting another opportunity for you to make money. Enter again when we call the re-entry. The one thing I would like to maybe talk about another day is how do people feel when they hit a win? I bet you they're all really excited and they're jumping up and down and they're yes. We need to try and remove that mindset. So when I look at a trade, when I take a trade, if it wins, it wins. If it loses, it loses. I'm not jumping up and down, bouncing around my office. It's pat on the back, good job today. I don't have any emotional chat. I know that's unreasonable to expect people to do that, but if you can start doing that a little bit more, those little things like hitting a break even won't piss you off. Those things like hitting a stop loss, which are completely natural, won't ever piss you off either.
Nice, man. Guys, there's 400 of you guys still on this call. Did everyone get
They all
value?
stayed up there, Jesus. Sorry.
There's the 50 or 60 people who jumped off after the source, like they're the people who are probably not gonna know what happens at the end, you know. So for those of you who've stuck around, you know, it'd be good to get your feedback on this. Let us know. Again, this is something that we felt was needed so that, you know, you guys could understand and see the precision that was behind it because, you know, a lot of people ask questions. They want to know the in-depth of things. The reason that we have the results that we do is because the statistics and the numbers behind it, basically they're the things that we can back the trades on. So, you know, ultimately having these results is not normal in this industry. I've been doing this for 8 years and I've never seen these results. So, you know, you guys are how I would look at this for you guys is we're getting these results whilst all the shit's going on with Trump and fucking China and all these other places. Can you imagine when the world settles down a little bit, which it maybe never will, how simple this will be for you guys? So for those of you who are new, you're a little bit confused right now, just stick to the trades, stick to the stuff that we're sending out. Don't let it, you know, overwhelm you. Don't let it confuse you. Take the trades, get in, get out, make your money, step away, be comfortable losing money at the same time. And we'll be here in 6, 12, 18 months in a completely different position. And the chat's absolutely on fire. People saying that they get an insane amount of value from this. So any kind
No,
of closing
sorry, Brad.
remarks?
Sorry to interrupt, Brad. I just didn't want to miss it. Can I just add a point to that?
Always,
He
always.
hasn't. Yeah, what's really important, especially with how volatile gold is that you do not hesitate.
Yeah.
Now, maybe a year ago, maybe a year and a half ago, I missed so many trades because I second guessed myself. So now I've completely taken myself out of the decision making. I only enter if the mechanical match, the strategy, and all of the criteria is met. Let's say, for example, I'm looking for a buy from this level here now, right? One of my criteria is that this liquidity gets taken. Let's say it only came to here and it starts going green. I don't go, oh, do you know what? There's a good chance it could go up here. Yeah, I'm going to enter a long. No, it hasn't met my criteria. I don't care if it goes 5,000 pips from this point. I don't think, oh, I missed out. I should have thought about it. I should have just done it off what I feel. It doesn't meet my criteria. It's not a high probability setup and will never be sent in the signal group. Therefore, you can trust and have wholehearted confidence behind every single entry. Do not hesitate. When I send a signal, doesn't what the chart looks like, doesn't matter what your mate tells you, take the trade. Because 9 times out of 10 it's going to play out in our favor.
Nice, man. Nice. But guys, I think there's no more real pressing questions there that kind of can get touched on this. I think the vast majority of them were entries, break evens, and stuff like that. Um, Ultimately, people learning about pips and things like that we can cover on another time. But yeah, I think unless there's anything you really want to dive deep into, then I think we can look at wrapping it up, bro.
No, I'm good as long as you think everything's been covered that needs covering. As long as everyone's got as much value out of it they need to, then yeah, we can wrap it up. If there's any more questions or anything else you need from me, then do just let me know.
Perfect. But guys, there's a lot of people saying insane value. Really appreciate it. Thank you very much. But we will call it a night, guys, and let's start seeing you guys engaging. Because if there's 450 of you on the call, want to start seeing them likes and thumbs up in the chats as well. So you know, apart from that, we can call it a day, guys and girls. So I appreciate every single one of you jumping on, and we will catch up with you all with inside the channel. We've got a couple of hours before the market opens, and I can already see this being an absolutely incredible week. So I appreciate every single one of you. Matthew, I appreciate your time as always, my friend. James has been on in the background, and I'm excited for the week coming up.
Perfect. Take care, guys. Catch you tomorrow.
See you soon, guys. Bye bye. Bye bye.
Bye bye.